Most beginners think AI trading bots are a shortcut to easy money. But the reality is very different. Some people make them work, while others lose money within weeks. So what's really going on? In 2026, hundreds of AI trading bots promise automated profits. You've probably seen them everywhere. Passive income, automated trading. AI is doing the work for you. But very few people explain how these bots actually work. In this video, I'll explain AI trading bots in simple terms for beginners. You'll learn what they actually do, how they make trading decisions, the main types of bots, and the risks most beginners ignore, so you can start thinking about automation the right way. Welcome to TechMoneyAI. This channel focuses on practical strategies for using AI tools in finance and investing. The goal is simple: help you invest better with the power of AI. No hype. Just clear explanations and smarter decision frameworks. What is an AI trading bot? Let's start with the basics. A trading bot is a software program designed to execute trades based on predefined rules automatically. Instead of manually buying and selling assets, the bot analyzes market data and places trades automatically. Modern bots may use technical indicators, price patterns, machine learning models, statistical signals. For example, a bot might be programmed to buy Bitcoin when the price drops to a certain level and sell when it rises. This removes emotional decision-making, which is one of the biggest problems in trading. However, a trading bot is not predicting the future. It's simply executing a strategy faster and more consistently than humans. Why people use trading bots? There are three main reasons investors use trading bots. 1. Automation. Markets operate 24 hours a day, especially in crypto. Bots can monitor markets continuously and execute trades even when you are sleeping. 2. Emotion control. Many traders lose money because of emotional decisions. Fear, panic, greed. Bots follow rules. They don't panic, sell, or chase hype. 3. Speed and efficiency. Algorithms can analyze market conditions much faster than humans. They can process multiple signals simultaneously and react instantly. But speed alone does not guarantee profit. That depends on the strategy behind the bot. Types of trading bots. Not all trading bots work the same way. Here are some of the most common types. Grid bots. Grid bots place buy and sell orders at fixed intervals within a price range. They work well in sideways markets, where price moves up and down within a range. Many beginners start here because the strategy is relatively simple. Trend bots. Trend-following bots attempt to capture strong market movements. They rely on indicators like moving averages, momentum signals, trend strength. These bots perform best during strong market trends. Arbitrage bots. Arbitrage bots exploit price differences between exchanges. For example, if Bitcoin is slightly cheaper on one exchange, the bot buys there and sells where the price is higher. However, this strategy requires understanding fees, liquidity, and execution speed. AI-adaptive bots. Some platforms now offer AI-based bots that adjust strategies dynamically. They may use machine learning models to analyze large datasets and adapt to changing conditions. But even with AI, human oversight is still necessary. The biggest misconception. One of the biggest misconceptions about trading bots is that they automatically make money. This is not true. A bot is only as good as the strategy it follows. If the strategy is weak, the bot will simply automate bad decisions faster. Also, markets change constantly. A strategy that worked last year may not work the same way today. That's why successful traders focus on risk management, capital allocation, realistic expectations. Bots are tools, not guarantees. What beginners should focus on. If you're just starting with AI trading bots, focus on 3 things. 1. Risk management. Always define how much capital you are willing to risk. Never use funds you cannot afford to lose. 2. Strategy understanding. Before activating any bot, understand the logic behind it. Ask yourself, why does this strategy work? 3. Simplicity. Start simple. Many beginners make the mistake of jumping into complex strategies too quickly. Learning how automation works step by step is much safer. Practical summary. Let's summarize. AI trading bots are tools that automate trading strategies. They can help remove emotions, increase efficiency, and monitor markets continuously. But they are not magic systems. Success depends on strategy, discipline, risk management, realistic expectations. When used responsibly, AI tools can become powerful assistants for investors. If you're interested in learning more about how AI tools can support smarter financial decisions, I've linked a beginner roadmap below. It explains practical ways to start small and build structured strategies step by step. And if you enjoy this kind of content, consider subscribing. This channel is all about helping you invest better with the power of AI. And I'll see you in the next video.